I'm convinced there's a good chance we could see the crypto bull market kick off by 2024, and I've got 7 solid reasons to think so. I've done my homework, digging into the data and research, and I'm ready to lay it all out in this video. So, let's dive in. The first reason I'm leaning towards this prediction is that I think we've already seen the worst of the bear market. Take a look at the charts with me. The first hint of a bull market is spotting the bear market's bottom. And if we consider the events of November 2021, after Bitcoin hit an all-time high of $69,000, the picture becomes clearer. Throughout 2022, Bitcoin took a nosedive. And I'm not talking about a small dip. It plummeted over 77% and found some sort of footing around $15,500. This period has been one of the toughest bear markets in crypto history, and it's been nearly 2 years since it started. Now, many experts are of the opinion that Bitcoin reached its lowest ebb in November 2022. And unless Bitcoin dips below $15,000 again, it's likely we've already hit the bottom of the bear market. The low point of the crypto bear market is marked by the orange line on the chart, and the green line shows the rise in Bitcoin's price from that point. Sure, Bitcoin has had its ups and downs since hitting that bear market bottom, but if you pull back and look at the long-term charts, the direction is mostly up. Here's my take. Unless something completely unpredictable happens, I don't see Bitcoin falling back to those bear market lows of $15,500. Right now, as I'm making this video, Bitcoin would have to fall by more than 44% just to touch those previous lows again. On the flip side, if Bitcoin does take a plunge and hits that support level, it could turn out to be an excellent moment for long-term investors to buy in once more. The second reason I'm looking at is the changing attitude of the SEC towards crypto. For starters, the SEC has recently started to see Bitcoin and Ethereum as commodities, not securities. This is a big deal for everyone in the crypto world because it means these 2 major players are now under the CFTC's watch, not the SEC's. This is great news because the SEC has been pretty tough on crypto, often giving blockchain companies a hard time. So any move that takes crypto out of the SEC's grip is a positive sign for the market. Speaking of the SEC, there have been a few victories against them, plus some fresh updates. For instance, the SEC has hit some roadblocks in its legal fights with crypto companies. Take the well-known battle between the SEC and XRP. After more than 2 years of back and forth, the judge sided with Ripple Labs, confirming that XRP isn't a security after all. Moreover, the SEC's attempt to overturn a pivotal decision was knocked back by the judge on October 3rd. The judge made it clear that the SEC couldn't show strong enough reasons for the appeal. In another case, the SEC was in a tussle with Grayscale, the crypto asset manager. Grayscale managed to win against the SEC's refusal to let it convert into a publicly traded Bitcoin ETF. Here's the lowdown. Grayscale wanted to start a Bitcoin ETF, but the SEC said no. Grayscale didn't take that lying down and sued. Their lawsuit paid off, and they got the green light to proceed with the Bitcoin ETF. Finally, there's the SEC's legal action against Coinbase and Binance. The SEC accused them of acting like national securities exchanges, brokers, and clearing agencies without the right registrations. This really showed how crypto companies are pushing back against the SEC's heavy-handed approach to regulation. Both Coinbase and Binance have stood their ground, arguing that the services and assets they provide don't fall under the category of securities that the SEC is claiming. These ongoing legal battles are casting the SEC in a light of an overzealous regulator that isn't quite serving justice. To put it simply, they've been on the losing end more often than not. Reflecting on the last bull market, the SEC's actions arguably stifled the market's potential growth without really safeguarding many investors. Consider the number of exchanges that went under, the scams, and the influencer-led pump and dumps that occurred. This is precisely why we champion transparency on this channel, which, by the way, was the biggest crypto channel during the last bull market. We've had offers to pocket millions from projects, but we've turned them all down. That's also why you should hit that subscribe button before the next bull market kicks off so you're in the loop with the most honest, transparent, and just news out there. Number 3 on my list is the upcoming Bitcoin halving cycle. Now, many might think it's a couple of years away, but it's actually anticipated to occur in the first or second quarter of 2024. We could be looking at this event as soon as February 2024, or maybe around June of that year. And if we take a trip down memory lane, Bitcoin's value has historically surged following each halving. After the first halving, for instance, Bitcoin's price skyrocketed by over 9,000%, hitting an unprecedented high above $11,000. The subsequent halving sparked a surge of more than 3,000%, pushing the price beyond $119,000. And as many of you might recall, after the third halving, Bitcoin soared to its current record peak of $69,000. But let's talk about what the numbers are telling us. Typically, the all-time highs have materialized roughly a year after each halving. So, if the pattern holds and we see a halving in 2024, we could be eyeing a new all-time high by mid-2025, if not earlier. Despite the current bear market, we've observed that the big players, the whales, haven't been deterred. They're still piling up on Bitcoin. MicroStrategy, that's the company I'm talking about, they've been snapping up Bitcoin by the tens of thousands even in the past year. As of September 24th, they're holding a staggering 158,245 Bitcoins. This tells us something important. These early birds who got into Bitcoin, stored it safely in cold storage, and sat tight are now back in the game buying up more. And if I'm reading the room right, this could only mean they're betting on a price rise on the horizon. Now for my fourth point, there's a noticeable shift toward optimism and away from fear in the market. And just to be clear, I'm not mixing this up with the broader economy, which isn't looking too hot right now, what with the housing market taking a hit and the car market on shaky ground. Despite the general public's anxiety over the market's health, it's becoming apparent that the big banks and financial institutions aren't bracing for that catastrophic economic collapse or the massive market crash that was the talk of the town at the start of the year. Back in September, Goldman Sachs actually dialed back their prediction of a U.S. recession happening in the next year to a mere 15%. They released a report, which they called Soft Landing Summer, highlighting some positive signs in the economy, like inflation cooling off a bit and the job market holding strong. These signs are pointing away from the kind of recession everyone's been worried about, the kind that could be triggered by the Federal Reserve's moves. Now Goldman Sachs, of all the banks, has every reason to tread carefully. They've been through the ringer in past market downturns, so it's somewhat reassuring to hear that they, who've been burned before, are either learning from their mistakes, or they're confident enough to say this time might not be as rough as the last recession we went through. I get it, the talk of the town is all about the looming market crash, and it seems like that's been the forecast for the last 20, 30, or even 50 years. I've mentioned this before and I'll say it again. Market cycles are a part of life. We see the highs, we endure the lows, but these are the times when you want to be building up your investments, so you're set up for success when the market swings back in your favor. That's the time when investors and traders like you and me can really thrive. Looking ahead to point number 5, we're witnessing a surge in institutional interest in crypto. I've touched on this earlier, but it's worth reiterating. The SEC's new openness to consider spot Bitcoin ETFs is a game changer. While we can't bank on approvals just yet, the mere possibility is exciting because it could lead to a massive influx of institutional money into crypto, the likes of which we haven't seen before. But let's not get ahead of ourselves. Even without this, the adoption of crypto by big players is on the rise. CoinGecko reports that 32 publicly traded companies are holding over 241,000 bitcoins, valued at a staggering $6.6 billion. And then there's NASA, partnering with Lone Star to send blockchain-linked data cubes to the moon. Talk about taking to the moon, literally. Now, on to the sixth reason why I think a bull market could be on the horizon, and it could hit with a bang. Top crypto projects are relentlessly innovating. Take the much-anticipated Ethereum merge. It's still in the pipeline, and it's not just the big names, even the smaller projects that might have slipped off your radar are gearing up. They're not just sitting around, they're actively preparing for the next market upswing. While the general public might have lost interest in crypto for now, these projects are doubling down, putting in the work, so they're primed and ready when the bull market charges in. The seventh reason I'm eyeing is the buzz outside the crypto world, especially around the metaverse and NFTs. They're still evolving, and here's a scoop if you missed it. Apple is rumored to be launching their VR headset between 2024 and 2025. Knowing Apple's knack for creating devices that are super user-friendly, this headset could totally transform how we experience the metaverse, potentially bringing it into the mainstream. So what's the connection to crypto? Well, the metaverse and blockchain are pretty much intertwined, since many virtual worlds use cryptocurrencies for transactions or involve NFTs that hold value within these digital realms. Imagine the wave of users Apple could drive into the metaverse with its loyal fan base. If Apple jumps into the VR and metaverse game, I'm betting it'll not only draw the crowd but also boost trust in the tech, which spells good news for crypto. More people in the metaverse means more demand for digital currencies to snap up virtual goods, land, and services. And even if that's all just speculation, Apple's move into VR could be a huge nod to the legitimacy of both the metaverse and crypto, sparking even more investor confidence. I truly believe that everything unfolds just as it's meant to, so perhaps 2025 might just usher in one of the most incredible bull runs we've ever seen. And here's the cherry on top of all the good stuff we've covered. The market hasn't exploded yet, which means you've still got a shot to get in on the ground floor, to make some gains, and to gear up for when the tide turns in our favor. If you've gotten even a sliver of insight from this video, go ahead and hit that like button. It really plays nice with the algorithm. And don't forget to check out the links for Moomoo and Weeble where you can snag a bunch of free stocks. I cashed in like 15 free stocks from Moomoo a while back and pocketed a cool $70, so it's literally free cash. They don't charge you a dime, and there's no subscription fee. Thanks a ton for tuning in. I cherish every one of you. Catch you all on the flip side. Take care.